The crash that everyone's talking about right now will be worse than 2008.
We are seeing finally evidence of a real correction where prices are going to come down.
So that would be the first time since the post-2020 era that a major player in the real estate space acknowledged that home prices would be going down in the US.
Hey, stop what you're doing and listen up, because what you've heard about home prices collapsing or going nowhere, it's almost all noise. Right now, I'm going to peel back the headlines like housing market crash or home prices are flat and show you what the data and experts are saying about where we're really headed ending 2025 and headed to 2026 and beyond. If you're buying, selling, or just staying ahead of the curve, this video is for you. Let's start with the big question everyone's asking. Is the housing market headed for a crash? You've probably seen the post, the clickbait headline screaming, home prices are about to plummet. And yeah, I know, it's easy to worry. Here's the truth. The data doesn't show a crash is coming. It shows steady and slower growth, which, by the way, is how it should be. It's more sustainable. Experts like Fannie Mae tracks this every quarter in their home price expectation survey. They're projecting home prices to keep rising nationally through at least 2029. This is consistent with what they have been saying in the past. We won't see any meaningful decline. Sure, there will be little bumps along the way, but not what the headlines are screaming. Look, even the most pessimistic group of experts, they expect around a 5% total gain over the next few years, not a drop. And the average forecast calls about 2 to 3.5% growth each year. That's a bit lower than the long-term average of 4 to 5%, but it's still healthy and, more importantly, sustainable. Now, still some people are saying we are headed into another mortgage meltdown. But let me tell you why this isn't another 2008 situation.
The housing market is rock solid.
It's a time bomb.
Number one, because the fundamentals are completely different. Back then, we had a flood of new construction, risky loans, and way too many homes for sale. Today, it's completely the opposite. Take, for example, new home builders. They're not just building homes and sticking to their plans and just build. Now, when demand slows, builders pause.
It's time to stop.
Sure, there are areas where there might be an oversupply of new homes, but overall, new home builders have learned their lessons. Then there's the lack of risky lending. Gone are the days of if you had a credit score and you were breathing, you had a loan. These days, every borrower is scrutinized by lenders to make sure they are really qualified. I have several clients that are well qualified and can afford these ridiculously high monthly mortgages. But as soon as they cross lending guidelines, their lenders push back hard. They don't just get approved automatically. And then there's inventory. While inventory is increasing, it's not increasing to the point that we have an oversupply. Realistically, it's still somewhat tight, just not as bad as the previous years. And remember, real estate is local. Nationally, we're seeing slow growth, but your zip code could tell a different story. Some markets are inching up, others are seeing slight dips. But overall, this isn't crash territory. This is what a normal, more balanced market looks like after a wild few years. For homeowners, you can take comfort that this means your value isn't evaporating. It's not skyrocketing either. For buyers, the pace is calmer. Fewer bidding wars, less chaos. The only downside, if you're waiting for prices to crash, you could be waiting for a long time. Okay, so what would 2026 look like? A lot of experts believe that next year is when things finally start to shift. After a couple of years of, stuck in neutral, the housing market might finally get back in gear. And if you're asking why and what's changing, simply put, a lot of people have put off moving in the last couple of years. So more people are expected to move. For the past few years, high mortgage rates and affordability issues kept a lot of people on the sidelines. But that can't last forever. People still need to move. Whether it's new jobs, growing families, or downsizing, the reality, life doesn't stop. And experts agree 2026 is when more of those moves start happening, meaning these people that have put their plans on hold, they can't wait any longer. The National Association of Realtors projects home sales could jump around 14% next year. That's a solid comeback after the slowdown we've had. And then there's mortgage rates. This has been a big roadblock for a lot of buyers. We've seen rates bounce around 6% range lately. They're not cheap, but they're also no longer in the sevens. And forecasts from Fannie Mae and others show we could see them dip lower, maybe in the low sixes, possibly even in the high fives if the economy cooperates. Now, will it do a straight drop? Most likely not. Think of it like this. When rates go up, it's like taking the escalator or elevator. When they come down, they take the stairs. It'll be gradual and there will be bumps along the way, but overall, the trend points down. And even a small dip can make a big difference in monthly payments. Then there's home prices. Like I have mentioned, they're still expected to rise, but at a much slower pace. Most forecasts call for 1 to 4% growth nationwide in 2026. California Association of Realtors is projecting about 3.5% increase in median sales price with a slight bump in sales. That's steady, healthy growth, not a roller coaster. More predictable prices means buyers can plan better and sellers can set realistic expectations. So, what does this all mean for you? If you're a buyer, improving rates and slower price growth means better opportunities. You might finally see homes you can actually afford and with less competition. Now, if you're a seller, demand is expected to pick back up, especially in areas where inventory is still tight. But if you're in a cooling market, realistic pricing is going to be key. Okay, before we conclude, I want to spend a little more time on this idea that home prices are flat. But before I do that, if you're getting value from this video, please hit that like button and comment below what you or where you think the housing market is headed. What do you see in your local neighborhood? Okay, you've probably seen the headlines saying prices have stalled or that nothing's really happening in the market. And depending on who you are, that can either sound boring or it can sound scary. But here's the truth. Flat doesn't really mean flat.
Wait, what?
Flat doesn't really mean flat. What's actually happening is that prices are splitting. Some metro areas are climbing while others are dipping a little. The Joint Center for Housing Studies at Harvard found that where inventory has started to build up, prices are easing. But in markets where inventory is still tight, prices are holding firm, even inching higher. So when you take all those different markets, average them together, you get a number that looks flat. But that number doesn't tell the real story. And just to give you some perspective, even in markets where prices are down a few percent, remember how much they've gone up over the last few years? We're still talking double-digit gains since 2020 in most places. So even if there's a small dip, homeowners are still way ahead. Now, if you're buying, this is where you really want to pay attention. If you're in the market where prices are still creeping up, waiting could mean paying more. But if you're in one of those markets where prices are easing, that's your chance to negotiate. Maybe you might be able to get seller credits, repairs, maybe even some closing cost help. If you're selling, the same idea applies in reverse. In a rising market, you've got leverage. You can price confidently and expect good activity. In a cooling market though, it's all about pricing smart from the start. Be flexible, offer incentives if you need to. Homes that are priced right are still selling and selling fast. And here's where having a solid local agent makes all the difference. And hey, by the way, if you need a local agent where you're at, let me know and I can give you a referral. National stats can point you in the right direction, but your zip code might be playing by its own rules. That's why you want someone who's tracking your local data every week, who knows if your neighborhood is heating up or cooling off. The bottom line, flat isn't flat. It's a mix of markets moving in different directions. Buyers can find opportunity in the slowdown. Sellers in strong areas still have the upper hand. The key is knowing your market, because that's where the real story is. And remember, this isn't the market of 2021 anymore. You're not buying expecting a 15% jump in value next year. You're buying for the long term, for lifestyle and stability and the fundamentals. If you're selling, price it right from the start. In a market that's normalizing, a mispriced home will sit and then it kills the momentum. Highlight what makes your property stand out. Even if the demand is a bit softer, unique homes always grab attention, and be ready to negotiate concessions like closing cost help or flexible move-in dates. These can make or break the deal. If you're holding, meaning you already own your home, here's your play. Take comfort that your value isn't crashing, but don't expect those pandemic-era rocket gains either. Plan for steady, slower growth. And if you've been thinking about moving up or downsizing, talk to a local expert. We can look at your numbers and see if now actually makes sense for you. Because in this kind of market, the people who make informed, data-driven decisions and not emotional ones are the ones who usually win. And remember, everything is local. If you're here in the Bay Area, your neighborhood could be telling a completely different story than what you are seeing in the national headlines. So whether you're buying, selling, or just staying informed, use this moment to make smart, not sensational moves. Hey again, thanks for watching. If you found this helpful, please hit that like button and subscribe. See you on my next video.